welcome back. You're watching The Money Show, and now it's time to get your portfolio queries answered. And for that, I have been joined by Anil Rego from Right Horizons. Anil, good evening and welcome to the show. Let's begin our viewer queries, and let's take Mr. N.T. Rao's query first. He says he's 55 years old. Total investment till time is almost 13 lakhs, and the goal is to achieve 80 lakhs in next 3 years, and right now he has 50k monthly SIP going on, PPF around 20 lakhs, and he's putting in money in ULIP also 1 lakh. So the kind of funds he has in his portfolio: Nippon India Small Cap, Quant Mid Cap, SBI Contra, Axis ELSS, Quant Small Cap, and Tata Mutual Funds fund he has in his portfolio. Okay, so so far total amount in the portfolio is 18.42 lakhs, and he knows his risk profile. He says he's an aggressive investor. Okay, so the aspect, according to you, which should be changed in his portfolio, Anil?
So, a couple of points that I just want to start off with, and maybe, what is the amount that he needs to invest, right, to be able to achieve his goal of 80 lakhs, okay, and that he wants it sort of over the next 3 years. So, based on his current SIPs, they will grow to about, 21.5 lakhs, assuming a 12% return, and the current portfolio also will grow to about almost like 26 lakhs. So this 32 lakhs would require almost like a 75,000 rupees per month of SIP to be able to achieve it. Now, if his portfolio is able to deliver higher than 12%, then he will probably be able to achieve that earlier than this period of time. So I think that is the first thing, it's important to plan the overall. In terms of his portfolio, yes, significantly linked to either mid caps or small caps or contra funds, and also a sectoral fund. At this point of time, I would only put, say, the Tata Housing Opportunities Fund, which is a sectoral fund, on watch. Okay, because a sectoral fund, you need to come in, get in, and get out at the right point of time. So if it delivers a good return, at then over a period of time he could look to exit it. But the SIP mode will also help him in this period of time. Right? So now, I would think that, since he's already taken a very concentrated type of thing across small caps and mid caps, I think that this time maybe, the 75,000 rupees, if he's looking to invest through an SIP, he can do it through, large and mid cap fund, not necessarily just a large cap fund, because he wants to take a higher risk profile. So large and mid cap. Then he can also do ICICI Pru Value Discovery Fund. And supplement, it with a small cap Nippon India small cap, and say Nippon India multi cap as well. So I think a combination is what I would be more comfortable with. Even if you leave out, let's say, the large cap, I think start off with the large and mid cap, and then go down to looking at your diversified set of funds.
All right, it's quite surprising. He says an aggressive investor, and for 3 years, he has a totally equity-dominated portfolio. So thanks for the changes that you have recommended. But apart from that, so this investment amount is enough to achieve 80 lakhs, right? Or he needs to pump in more money somewhere?
We have a short form, which is why I suggested that he needs to do an SIP of 75,000, and those were the recommendations that I gave for the 75,000.
Let's move on and let's take Abhay's question. And okay, so he wants to do a lump sum invest in mutual funds. Time frame is for 6 to 7 years, and currently the market being overvalued according to him. How should he go about it? And he already has mutual funds in his portfolio for regular SIPs, and he says that he intends to do a lump sum investment. Around 60% in large cap, 25% in mid cap, and 15% in small cap. Now, how should he invest in equity savings mutual fund also? And he might want to put that money in equity savings fund, and then he says he can do a lump sum in any other fund or active fund that you recommend him for the corrections almost 2 to 3 years time. Or you can, he's slightly confused as far as the question is concerned. So yeah, we might have to just give him a strategy that way.
Yeah, a quick one. I think, first of all, he's spoken of doing 60% in large cap and multi cap and another 25%. So I think the large cap the large cap is 60% can be broken up into large and multi cap, right? So rather than putting all 60% into large cap, then he said 25% mid and 15% small. I'm okay with that. So that is the first thing. The question that I guess he has is on the overvalued market. First of all, I don't think it is overvalued because if you look at just from a very simplistic way, you look at the P ratio, right? An absolute high actually is irrelevant because if your earnings keep growing, which has happened over the last 5 years, there's no problem if the market goes up. And in fact, in that period, you probably have seen the P ratio come down. Okay, so today we are at around say 23.5. We've been hovering the range plus or minus. On the other hand, if you go back and see, in 2019, for example, it had gone all the way to 29 times, on the Nifty. So it's not as bad, I think, but what I would suggest rather than trying to time the market and saying I'll wait for a correction then invest, I would rather suggest a systematic transfer plan where you park it into a debt fund and then you transfer it systematically. Now, these are the funds that you can consider right from ICICI to blue chip on the large cap side. You can look at on the mid cap side, HDFC mid cap opportunities and small cap, let's say Nippon India small cap. We like the Nippon India multi cap for him to invest and possibly a HDFC Flexi Cap. Now, the combination that he can do based on his risk appetite, and like I said, maybe the large cap he can restrict to 25 to 30% and then cover up another, say, 30% or so into, the Flexi Cap and the multi cap side.
I think that's the time we have for all the queries today. Anil, thank you so much for being on the show and helping our viewers with their financial portfolio query.